Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video we're going to take a look at a measure of volatility that often is a very good indication of when the market's getting stretched, either overbought or oversold. So before I go into the details, I just want to make sure if you're just finding us on YouTube that you subscribe to our channel, and also know that you can get more information like this from our website at marketgauge.com/tutorials, as well as by following us on Twitter at MarketGauge and at Market Minute. All right, and finally, to make sure you're seeing this video as clearly as you can, make sure you check the HD setting in the lower right hand corner of the video. All right, so with that, let's get right to the indicator. So the indicator that you're looking at the bottom of my chart here is a representation of market volatility as expressed by the VIX and the VXV. So I call it here the VIX and VXV ratio. And what we're doing is we're dividing the VIX, which is a 1 month measure of volatility, by the VXV, which is a 3 month measure of volatility. So without getting too technical, the idea here is when that ratio becomes too high on the upside, you've got excessive sentiment, and as with all sentiment indicators, that often coincides with markets topping out, or at least going sideways. Now we've got 3 different lines here, and all they represent is 3 different time frames or moving average of that same ratio. So you can kind of see the red one, the fastest one, will lead, and then the others will be right behind it. If you look at them kind of as a consolidated band, that's really all you got to do for the big picture. What we want to see is it get up over a threshold. So in this case, the 1.2 is the first threshold. But the reason I bring this to your attention is you can see how high this is relative to where it's been in the last over a year. This is as high as it's been. Now, does this mean that the market's going to necessarily turn around and head straight lower? No, not necessarily. And the way you want to interpret this is you want to see it come back down and start heading down before you anticipate that the market may have put in a top. Now, don't worry, I'm going to show you where you can get this indicator for free in just a minute. So as the SPYs have had a really nice run up, you would expect that the sentiment would get more positive, and that's all healthy. And in fact, you can see on the bottom here, we have the opposite scenario. It bottomed out right at the 1 threshold, where we typically see bottoms come into place. You don't always know the extent to which the market's going to rally based on this. It's just looking at the market when it gets to these extremes, you'll see that it has a pretty good correlation with the markets getting tired. Now, when you come off a really strong, or I should say really weak low, it's actually a good thing to see this get overbought relatively quickly, because it means the sentiment has shifted in a way that could continue. So it's not surprising that it didn't roll over right in here and continued higher. But as you can see, when it finally rolled over again, that demonstrated that the market was a little excessive in terms of its sentiment and pulled back a little bit. All right, so pretty straightforward. And again, this is just a heads up that we are pretty high. And if this thing starts to roll over and comes under the 1.2 level, you should be keeping a close eye on what the SPYs are doing. And if you want to get this indicator for free, we actually post it on our website, marketgauge.com, in our free resources area. So if you go to the link I gave you earlier, marketgauge.com/tutorials, or go to marketgauge.com and then go to resources, you'll find a little big view right here. And when I click on that, you'll see it will take me to the same page you'll find if you go to /tutorials, and then you're going to go into the market internals section. All right, we've got a whole bunch of stuff here. I'll cover that in different videos. You want to go in the market internals section, and down to the last chart, volatility ratio. And every night we update this for you so you can see where it stands. This is the chart you were just looking at. And we've even got a description here of how it works. If you want help, you can click on that. If you want more history, you can click right here, and you're good to go. All free, so keep an eye on it, and don't interpret this as it's time for the market to roll over immediately, but if it does, know that our sentiment indicator is definitely extended. Hope that helps, and I'll see you in the next video.